Good morning, everyone. It is May 22nd. It is 25 minutes after the market opened, and the market is green on the NASDAQ, a little bit green on the S&P, and a little red on the Dow. Year to date, the S&P is kind of getting back to where it started. We're down 0.56% overall in the S&P index. We had big news come out of Washington where they have a spending bill made it out of the House of Representatives, is now headed toward the Senate. That spending bill will keep the government functioning. It'll dictate, what they're going to spend money on. It'll be positive short-term news, and hopefully they get to a bill that reduces spend because government is spending too much money and we're accumulating a lot of debt. That debt can become a big problem. The bright spot in the market, a couple of them, Bitcoin, look at it fly, $111,323 per Bitcoin. Nicely done, Bitcoin. Year to date, Bitcoin is working. It's up 19%. Over the past year, it's up 59%. Over the 5-year, up 1,113%. And I've been accumulating Bitcoin since 2018, and glad I did so. Really glad. It's been a bright spot in my portfolio. I am doing well this year. I think some stocks and I can think Bitcoin. I can think Robinhood, Alibaba. There's kind of a number of stocks that have made it happen for me this year so far. But Bitcoin, boy, it's really, really doing well. So it's good to see that. And a part, I think, of the Bitcoin story is we are seeing the U.S. government accumulate a lot of debt. And that is a big, giant concern. The debt level, we're spending 14% of our GDP on interest payments for debt. That's a lot of money. That's like more money than we spend on Medicare. So we spend on interest. That's just a bad situation. And it's hard for politicians to cut back on spending because they want to go back to their constituents with, hey, I got you this. Hey, I got you this benefit. Hey, I got you that benefit. Hey, corporate, leaders, I got you this particular contract with the government. And if we keep at it, it's going to go from 14 to 20%, and that's a lot of spend, man. I think in the developed world, we are the highest spending country with regards to GDP of interest rates, or I should say overall interest paid as a percentage of GDP. We are the highest by a pretty good margin. So, it's not something that near term is going to be a big issue, but it's a big problem in the future. And in general, it shows that, we got to be a little more disciplined at the federal level and the state level to reduce our spend. Because what it does is it causes the rating agencies to rate the U.S. debt less favorable, and that causes rises in interest rates, which we've seen. Here's the 10-year, and it's not quite at the highest point it's been at over the last 12 months, but it's getting up there, 4.62 on the 10-year. And the 10-year basically is what home lending companies use to set interest rates when somebody's buying a house, when somebody's going to pull a line of credit on their home. There's a lot of things that are dictated by this 10-year treasury, and it's been going up, and it went up fast from April to where we're at now. It's gone up more than 62 basis points. That's a lot. Hopefully it doesn't go up much higher, because the higher the interest rate, the lower the stock prices, because they get discounted by a discount rate that's pegged on interest rates. So we'll see how that sorts itself out. Now, I'm starting at a little later time in the morning because I wanted to just see how the stock market opened and see which stocks are flying up. There's a couple that I've noted. I wanted to go over Advanced Auto Parts because their stock's up like more than 40%. Man, incredible. And I wanted to talk about Snowflake. I released a short, but I could talk further about Snowflake, maybe take some questions on it. If you have any questions on Snowflake, please put them in the chat. Let me know what you're doing with Bitcoin. Bitcoin is really, really rocking. And what's funny is I decided to de-risk my portfolio, and I've got plans to basically sell all my Bitcoin. So I guess I'm going to sell at a high. But I'm going to, I already sold some, and I've got more to go, and I'm going to keep doing it because I wanted to just reduce my risk. But maybe I need to reconsider because it's really amazing how it's been doing. I'm also buying bonds on days like this when the bond values or bond prices go down because interest rates have gone up. And let's take a look at where interest rates are going. So interest rates actually are dropping. So I guess the bond markets like the fact that Congress got a spending bill. It did have some discipline in that bill. It's not like, oh, okay, we're just going to spend a bunch more money. So it looks like interest rates are dropping, which means bond values will go up slightly. It's not a big drop. So that is encouraging. Good to see. All right, looks like Shadow Guy is on. How are you doing, Shadow Guy? Check 20-year plus 30-year yields if you haven't already. They were still going up. I think the long bonds were still going up. Right down here, they're going up slightly. The 20-year went up tiny bit, and the 30-year went up 0.02 basis points. Now, the 20-year is above 5%, and these are 20-year bonds that the U.S. government issues out to you, and they promise to pay you back. And they're going to pay you each year. They're going to pay you 5.114%. And that's a pretty good rate of return because this is considered a very low risk asset because it's the U.S. government. And if the U.S. government ceases to exist, goodbye Microsoft, goodbye Apple, goodbye Google, goodbye, all these stocks would be worth very little because they operate in the United States. So a lot of really, really, really bad things would need to happen in order for this debt not to get paid. So overall, the long bonds, when interest rates go up, that means the prices are coming down. I have an ETF with long bonds. I'm probably going to buy some of that today if the pricing is right. And I'm probably going to just hold my position everywhere else because everything else looks like it's going to be improving the price of my bonds, and I'd be paying more money today for more bonds. I've been buying up bonds quite a bit this week because we had those rises in interest rates, which created better prices for my bonds. So looks like Ivan is on. Trade Desk, buy or sell. I'm not sure. I haven't looked at Trade Desk in a little while. If you'd like to look at Trade Desk, consider a $5 super chat, buying one of those, put it in on there, and I'll do a full evaluation of Trade Desk. Or you can join my channel and you go to the home page, join. And when you're a member, you could request tickers on live streams and say, hey, can you take a look at Trade Desk? And then we can go through it. So give that some thought. I really appreciate you attending. All right, so let's keep rolling. I did have a couple of stocks. Let me look at the heat map. And then there's a couple of stocks that looked really interesting. So, wow, look at that. This is a green row on top. All the big, giant companies are nice and green. I'm going to start with Google. They're having a nice 2-day run. I think collectively they're up 7%. Google had a really good presentation day 2 days ago, and they rolled out their AI details, plans, their status of AI products. The easiest one to understand how good Google is with AI is Robotaxi, Waymo. You can get in a Waymo in like 6 different cities in the US right now, in the city of Phoenix, San Francisco, Los Angeles, Atlanta, Austin. I feel like I'm missing one. Miami. Um, they're they're in a number of cities, and a self-driving car will come pick you up and take you from point A to point B, and that is real AI. And they also have Gemini, which a third party verifies which apps are really getting used, and the highest number of tokens, which is how they measure the volumes of AI activity. The token rate with Google was the highest, and it's growing very, very rapidly because they're the real deal when it comes to AI. They're not like Apple, which is, oh, AI's popular. Well, let me call it Apple Intelligence. Oh man, that's brilliant. Wow, Steve Jobs would be proud. They're way behind and they're trying to catch up. Google has been there from the very start, and they have the foundation models, they have large language models, they have the infrastructure. They're even making their own chips, and they have the user interface as well through Gemini. More importantly, you think about the advantages that Google has. Um, I just switched from iPhone to a Samsung, which runs the Google Android operating system. And I use Gmail quite a bit, and I use Google Sheets in my analysis. So there's so many different ways that Google could present and get users for their AI applications through Gmail, their suite of products like Google Sheets, Documents, Google Docs. They could do it through the Android operating system is probably optimized for Gemini AI. Of course, my Samsung came preloaded with Google, the suite of Google apps, including Gemini. And they can present it to billions of people, boom, automatically. How many people use YouTube around the world? Billions. And billions use, the collection of Google applications. The operating system is installed. So a lot of people think that Apple's the leader in smartphones. And in a way, you could say theirs is the most expensive, right? Yeah, you could say that. But when it comes to units, they're not. The number one unit producer is Samsung. And then a bunch of other companies produce units too that run Android. So Android is actually the more popular operating system for smartphones. And Apple iOS runs on Apple. Apple controls that whole stack. It's a closed stack. They have their reasons, but it's those same reasons that when they came out with PCs, geez, 45, 50 years ago, that closed development model, the world moved on. The Macintosh, the Mac, MacBooks and so forth, that's a minority of the market share. The majority is PC because it was open and multiple companies and could develop on it and really take it and run with it. So in general, Google rolled out their AI business as a whole, and it's impressed the market. Look at that, 4.7. So that's great. Now we're up to closer to 8% over 2 days. This is one of my biggest holdings. And I continue to, say that, hey, Google's just too important of a company. They have too many good things as a business. They have terrific competitive advantages, and I am not selling my Google. I was actually buying shares, so I'm glad I did so. And catching the rally is Meta. That looks good. Tesla's up, Amazon's up, Microsoft's up, Nvidia, Broadcom. Palantir's up. Nice. Palo Alto announced, I think a day ago, their stock's up 3%. Looks like ServiceNow is up 1%. Salesforce CRM is up 0.78. Adobe continues to go green. That is good to see. Very good. So there's some green in software. Very good. We looked at Bill.com last night in the live stream. It looked like a good company, but I preferred Adobe. That was my conclusion. And I really like what Adobe's, the stock price has been doing lately. So that looks good. Where's there a lot of red? Energy down. Whew, that is pretty bright red. And utilities are down. Wonder why utilities are down. I'm not quite sure. Healthcare, we've got some red. United Healthcare stopped the bleeding. They bled a lot yesterday. I bought more shares of United Healthcare because I think they're worth far more, and over time the market will recognize that. So it looks like a mixed day, most definitely a mixed day. The big, giant stocks are winning the day. Welcome back to 2024. Welcome back to 2023, where the big, massive caps were taking most of the gains. And we got Microsoft growing their lead as the biggest, most valuable company in the stock market, in the U.S. stock market. We have Nvidia in second place, doing well today. Apple continues to go deeper into the red. They're down 20% year to date. Man, let me have a sip of coffee, guys. It is a really nice morning in Southern California, by the way. Nice, cool morning. We had a couple really warm days, but now we're back to high 70s, right where we want it. Amazon up almost 1%. They're trying to get back to even for the year. Google, man, these guys were down like 17% not too long ago, and they're making a comeback quickly. So good to see that's working. Meta doing good today, and overall in the year, I can't complain. 8.69. Berkshire was doing really well because I think a lot of money went from one of these stocks and it got parked at Berkshire. But ever since the meeting when Warren Buffett announced he was going to retire, and it's obviously going to come at some point because he's 94, this stock has not done all that great. And I don't own Berkshire, and I think the stock's going to sell off substantially once the great Warren Buffett passes away. I think the stock is going to go down because you're not going to pay the Warren Buffett premium. If there's no Warren Buffett, you don't pay the premium, I don't think. But who knows? Maybe people will be like, hey, no, it's still Berkshire. We think that the protege or the guy that's taken over for Warren Buffett is going to be good. We'll see. Time will tell. But so far, since that meeting, the stock's down. And it's down substantially. It's not down a little bit. Tesla making its move up, trying to get out of that red zone. Broadcom almost back to even. I think Broadcom's overpriced. And TSM up 1%. So the big caps are winning the day, taking a majority of those gains, taking it and running with it. All right, so looking at earnings for today, Intuit's going to announce after the market closes, and then the Toronto Dominion Bank is they already announced. Analog Devices announced, so I'm going to see what's going on with that stock. After the market closes, Workday is going to announce Autodesk. These are two software companies. Copart, Ross Stores, Deckers. After the market closes, they have a really successful shoe, the Hoka, and they are growing well. And their stock had really tumbled. Let me open that guy up. I'm curious to see where the stock's at. And I don't like apparel or footwear companies a whole lot, but my memory, Deckers has sold off so much that it became interesting to me. So we'll see. And then a stock that I wanted to be sure I covered was Advanced Auto Parts. Let me see if I can get that ready here. Here we go. So Advanced Auto Parts is up 42%. Wow. And the stock had been just getting crushed. And I noticed this stock before because I believe Pat Dorsey owns it. Let me confirm. I think I could do it best when I do this. AAP. And there's one investor that owns it. I thought Pat Dorsey owned it. I'm wrong. What does Pat Dorsey own? He owned an auto parts company. Give me a second. That's going to bug me, so I got to confirm why my memory failed me. So here's Pat Dorsey. He's my favorite investor. So he's in AutoZone. All right. See, this investment, I don't quite get it because his portfolio has a lot of like very innovative companies. Meta. He's in Google, so he's enjoying the rises in Google. Booking, PayPal, Wix, which does websites, Sprout Social, ASML. So you see that he's looking at businesses that have really strong moats, and he wants to own them for a long time. And he owns AutoZones, which stuck out to me, but I thought it was Advanced Auto Parts. Unfortunately for him, that's not the case. Good to see you, Bushy 1147. How are you, sir? Thanks for joining. And Advanced Auto Parts, I believe they beat on earnings and confirmed their forecast or provided guidance for the rest of the year. And I think now that the tariffs are going to be are in the process of getting resolved, their business is now flourishing, up 42%. But in the 1 year, it's still down 36.88. So it goes to show how bad the year had been. Even year to date, you're not in the green yet. It's sold off so badly that this rise is not getting the stock back to even for the year. Isn't that incredible? They are a $2.67 billion market cap company with revenues near $9 billion. So you're buying the company for a fraction of their sales. They don't have a PE this year, which means they're losing money. And they have a forward P of 20.85. Analysts say hold. And at this point, it's priced, I'm going to call it fairly. So it looks like Stock Analysis loaded the earnings that were reported. And that's interesting. Their revenue did contract. I think they were, I guess their viability was being questioned. Are they going to stay in business? And they're proving that no, they're going to stay in business. So I think that news is, hey, these guys are going to make it. So it's a viable company. The revenue 2.5 in the quarter, but let's go ahead and go for the trailing 12 months. They're 8.9 billion in revenue looking at the trailing 12 months. You see that the business hasn't really grown. For 7 years, they actually have contracted. That's a sign of a business that just has too much competition, is in a industry that has been around too long, and probably doesn't make a whole lot of money. Let's take a look at that. So they have negative cash for the trailing 12 months. They're trying to repair the business. At one time, they did have some decent cash. And their gross margins are not bad, 42%. They retail auto parts, and they have a lot of locations. So people, as they need parts, or maybe mechanic shops and repair centers, can go to one of their locations and get parts that are needed to repair a car. Profit margins, they're losing money this year. So the fundamentals look terrible. And investors that got into advanced auto parts were really, first, they were being punished, right? Before this big rise, it's up 45%, which means year to date, investors were down 50%. So that's torture. Over the 1 year, they were down, I guess, 70% or 80%. I mean, those are big, big losses, man. So they were being tortured, and then they have 1 day of relief. And it might be a good day to sell and get it out of this dumpster fire, because that's what it's been. The stock's really, really been a tough stock to own for investors. If you're in it for a year, I'm sure you tried to ignore that part of your portfolio because it did so bad. 16 analysts cover it, and their estimates were probably very conservative, very low, because the stock was not performing. So the best, most optimistic stock price was $55, and then the lowest was 34. So right now, even with that big rise, you're thinking the stock's fairly priced with about a 2% premium on the stock. And when we look at this year, they're supposed to do $1.54 in earnings per share. That's not bad. They'll have a P at 29. And then the P is really going to drop because their profitability is supposed to really expand. I think the stock will work if their profitability expands like this. So if they can execute well, I think the stock will do well. Let's take a look at the balance sheet, because you wouldn't want to jump into a kind of a rebound story and buy into a balance sheet that's just horrible. And they have a net debt balance of $2.41 billion. Let me say hello to Saeed. How you doing, man? Good to see you. It is morning for me, and I believe it's good afternoon for you. Thanks for joining. Debt to EBITDA is 4.3. So we want this to be 3 or less. And considering this company is in a rebound mode, hopefully within a year, maybe 6 quarters, they can get this debt to EBITDA below 3. And then the risk of them going bankrupt would not be very high. Right now, I think the investing community felt like this company may be going bankrupt, and the stock price was behaving as if more and more people were beginning to think they were going to go bankrupt. And then they had a good earnings announcement, and the stock popped. Okay, great. But the job's not done. They have to get the business stronger, have it grow, be profitable, and get your debt to EBITDA below 3. So that'll have to be monitored. This is not a stock for me. This is just not a really great stock. I'll use my desirability quadrant to make the point on this one here. Maybe talk about what stocks I would rather buy instead of this one. So we have, what's great about stock investing is we can buy into any company that's publicly traded in any industry. There's no rule that says you have to buy this company or that company. Now, since the company we're looking at, Advanced Auto Parts, is a retailer, and it's a retailer of what I consider are pretty common products, and it's kind of a stable kind of market. So the king of retail, e-tail, e-commerce is Amazon. They have the best competitive advantages, And an example of a retailer that is really weak and just every year the story gets worse and worse is Macy's. Advanced Auto Parts is a retailer. They're probably down here. Let me kind of adjust this on the fly. Let's go through the scorecard. Competition. Yeah, there's a lot of competition. Lots of competition. And our friends at Amazon, guess what they sell on Amazon? Auto parts. So if somebody's like, "Oh, I'm going to need to do an oil change. I need a filter, I need this, I need that." Boom, Amazon. So competition, C, and I would give them a D, but I'm going to give them a C because it is auto parts. If it was the retailer of jewelry, it'd be like F, or apparel. Oh, there's 1,000 of those. D. Network power, not really. It's convenience. Like if somebody's near an Advanced Auto Parts, they're going to go use it. Balance sheet, bad. Revenue is contracting. Profitability is getting better. I'm going to give them a C. Profitability, cash flow, D. So if you're in high school and you got 4 Ds and 2 Cs, I don't think you'd be passing that grade. I think they'd say, "Hey, you got to take this grade over again because you're not going to advance." And if you're a stock, those grades are not going to get you out of high school, or they're not going to get you out of the red. And I would say that they're not growing the revenue. They're not profitable. They don't have free cash flow. I think auto parts business is always kind of a good business because we all drive our cars. We all have to repair our cars and so forth. So these guys are in the red, and I'm very careful not to invest in the red unless there's a clear understanding in my mind on how this business is going to get much more valuable. I'd rather buy here. I own Amazon. I'd rather buy in the gray at a very good discount, because in the gray, the businesses are in, maybe if you're in the gray on this section, you have a very strong competitive advantage, but you don't make a lot of money. You're not growing very fast. But still, if I can get a very good discount, I feel good that this company has a competitive advantage. If you're over here, it means that you don't have a big competitive advantage, but boy, you're growing well, you make a lot of money, and you produce a lot of free cash flow. Again, if I get a discount high enough to compel me to buy, I would buy. And right here, I don't think I own one company right now that's in the red. And I'm not eager to buy companies in the red. It's bad form for me. I usually get distracted by companies I buy in the red because a little voice inside my head says, "You shouldn't buy this stock, man. You shouldn't buy this stock." And when I own it, that little voice pops up every time a stock goes, news comes out like, "You shouldn't have bought that stock." So I'm not going to buy this stock. And that's my logic to it. Hopefully you found it interesting. Saeed, you want to look at eToro. Has shown growth, but as a new company, should wait and see. Well, let's take a look. eToro has been making a lot of noise. And Rotella Cheese, good to see you. I'm going to get back to your comment in a bit, but I just want to say hello. Let's look at eToro, which I believe is a kind of a brokerage, right? They're out of Israel. Yep, it's like a brokerage. It's like a Robin Hood. It's like a Charles Schwab. All right. And your question is, how's it look? I think they IPO'd recently, right? So let's take a look. What is the symbol? eToro. Why isn't it coming up? Oh, because am I in the right? No, I'm in the right spot. Why isn't eToro coming up? Nope. All right. I don't know what's wrong with Google. I said all those good things about the company and their AI, but their darn Google Finance can't find eToro. I guess they're not perfect. Let's work here. All right, so they IPO'd recently. It looks like they IPO'd earlier in the month, right? Maybe that's the problem with Google Finance and why I couldn't find it. Now, usually there is a lot of risk when companies IPO. Here's Robinhood. It's doing great over the 1 year, right? But they IPO'd way back when, and look what happened. Investors, even if you bought on day one, you lost money and you were at a loss for a long time. You had to wait like 5 years to get back in the green, okay? And if you were unfortunate to have bought Robinhood at the high, man, you were just getting tortured, abused. So this tends to happen with IPOs. It's rare that we see an IPO that just gets announced, then goes up and to the right. That's rare. It just doesn't happen all that often. And we can look at a bunch of IPOs and, even like Airbnb. I mean, I can go through a long list. So that's for point number one is I don't like buying stocks near their IPO date because there's a lot of risk of it going down. Let's put that off to the side and say, okay, that's a red flag. This is a market cap of 5.48 billion. The stock has gone up 26% since they IPO'd. I guess they had an issue price and then they opened at a higher price because you could see that it's actually gone down because this is the first day of trading at the close. So the first day it ran up. They have $12.5 billion of revenue. Okay. PE ratio 7.5. That's really low PE. Now they provided these financials and they're audited. An auditing firm came in and said, we give you an opinion that these financials are accurate. The growth is really good from 23 to 24. They grew 228%. Looks really good. Now, what happened from 22 to 23? Interesting. And they break out the revenue. They have interest and dividend. Okay. Interest expense. Okay. The other revenue is probably like options fees, trading fees, all kinds of other stuff. Okay. So 12.5 billion, and we can't form like a trend, right? Because we're going from 6 down to 4 up to 12. It's like, man, what's the next number going to be? Is it going to be 15 or 5? I don't know. There's no trend at all. So, okay. They are producing free cash flow. That's positive. And it's probably because they probably make good money on their business. Now it is small margin, so they're basically making a little bit, but they have lots of transactions. Okay. So their growth is for the year over year is really incredible. Now, do you happen to know, Saeed, why did they grow so much? And my memory sometimes fails me, like it did with Pat Dorsey. I thought he owned Advanced Auto Parts. But let me open up their website. My memory tells me that they had something going on with crypto. And let me look at their top markets company. I was hoping to see like press releases. So we got, yeah, here we go. Crypto trading. So they have crypto trading, course, they have a credit card. Everybody has a credit card. And they have a platform to buy and sell stocks. Okay. Interesting. Okay. So they have investors that have a good reputation and you can follow their trades. Okay. So these guys are a trading platform. I don't have anything to say about them. I've never used them. I don't know if you guys have. If there's any comments out there of, hey, I've used it. It's good. It's bad. That'd be interesting to see on the chat. So I think I would wait on this stock. If you have, yeah, here we go. So they're into Bitcoin. They're into Ethereum. I'm going to look at their balance sheet. So I'm going to look directly at their financials in a bit. So they're into crypto. And I showed you Bitcoin's been flourishing. So Coinbase has been doing great. Robinhood's been doing great. Coinbase is dedicated to crypto. Robinhood has a lot of crypto trades in there. So let's go into, where's their investor page? Company. Where's your investor page, guys? They usually, under company, usually have an investor page. So maybe here, or leadership, awards. You guys are great. Where's your investor page so I can look at your financials? And there's another, like, I invest in Robinhood. I've been doing great with Robinhood. And I started investing in Futu, which is a brokerage in China. You may be familiar with Mumu. That's owned by Futu. And so far, so good with that investment. So I can't see their investor page. Where's their investor site? So bound reviews, offices. Huh. Well, I guess this is one of the few companies I've ever seen that doesn't have an investor site. That's weird. They should have an investor site. So here we go. All right. So this is where they did their initial public offering. Okay. All right. They did a partnership with YouTube. Looks good. And they haven't had an earnings, so maybe that's why they're not publishing their financials. Oh, here we go. So and I'm trying to get to the balance sheet because I want to see if they're holding a bunch of Bitcoin, because that's a compelling fact, or an important fact to consider. And they're not making it easy on me. All right. I'm desperate, so I'm going to need to ask Gemini for help. while it does that, I'm going to look and see if stock analysis loaded it. So they have $575 million of cash. So is this okay? There's no big numbers there, so it's not going to be that important. It's not like there's a $5 billion line and it could be Bitcoin. So we'll just move on. My conclusion is that, this business may be worth 50 billion at some point, or it may not. It may be a really rough ride. I showed you the graphs of Robinhood is a very good comparison, right? Same type of company. They have been good at what they're doing from the word go. But the market pumped up the stock and then it sold it off. And I don't know that eToro is all that pumped up, but even Reddit, it's kind of insane to see how Reddit has sold off, because I think the company's terrific. It's growing really well. But they announced, or they IPO'd in January, right? No, they IPO'd last year. And they ran up and now they've come back down. So these IPOs are hazardous to your portfolio, in my opinion. So hopefully that helps, Saeed. Thanks so much for your support. Appreciate it. Rotel and cheese. I know you like high gross margin. I've never seen a company with higher gross margins than GAMB. It's on sale. Thank you. Appreciate it. So Weeble got smacked down. Rotel and cheese is, had that comment. Doomy Trash, what's up, man? It's been a little while. Hope you're well. So GAMB. Did I get that right? And let's take a look at their fundamentals over here. So gambling.com. Doing well for the 1 year. Not great for the 5 year, but for the 1 year, it's doing well. And it offered up good points to buy the stock, right? Especially last June 2024. Really small cap, 428. Revenue's 138, so you're paying 3 times revenue, 4 times revenue. PE is low, 12.5. And forward PE, 13. Strong buy, 40% discount. Now, it really rose, and then it's kind of settled back down. So their growth is good, but it's not incredible. It's a small number, right? And let's take a look at their gross margins. Yeah, 94.55. I think because these guys may be like so country is Jersey. I never heard of Jersey as a country. Okay. Online gambling. So these guys do they do software and provide it? Okay. So they're providing data to help gamblers make good bets, I guess. All right. So that is interesting how high their margins are. Now, I value margins in combination with cash, right? Because you can have very high margins and then you have terrible back office operations, or you have to advertise a lot to sell a product, and then all your margins go away. So margins are incredible. Give them that. Profit margin is very good, 25. Excellent. Free cash flow margin looks really good. So free cash flow is 38 million for the trailing 12 months. So these guys are worth, and let's look at the balance sheet. So I'm going to say they're worth about 800 million less debt. And they do have $71 million of debt. So let's call it, they're worth 700 million. And they're currently, the market cap's 427. So these guys are discounted. They are very small cap. That's not a problem. And I'm not a big gambler, but I'll just kind of just call it the way I see it, which is I think gambling is kind of recession proof. It's kind of like something people like to do, especially around sports. I've got good friends that have plenty of money, and they can't sit down and watch a game without betting on it. It just seems to be like, it's just a must do. And then when we get together, they talk about their bets and they're very proud of their wins and they're bitter about their losses. And that floats their boat. Good for them. I'm not a big gambler. I'll bet once in a while, like Super Bowl, I'll put a couple $100 on if I think there's clearly good odds given to me, I'll do that. But I'm not like a habitual, player. But some of my friends, I would say, yeah, they are, man. They go from season to season. Football season's over. They start betting, I don't know, basketball and then baseball. And it's like, wow, man. Okay, there you go. Have fun. Knock yourself out. So back to gambling.com. I think there's a pretty good market for it. This is a stock worth keeping an eye on. I think the gambling sector has done okay. The expectations were high that they were going to do really well, but this is one of the first companies that I've seen where the fundamentals are really good. Some of the other gambling companies, the fundamentals were terrible. So I didn't like them. Now, the one thing I would say is, like, I'm not like the dumbest guy in the world, and geography is not my strong suit, but I've never heard of Jersey. Let's Google map it. Now I'm curious, where's this country? Am I gonna have to go to Russia to get? So I think this one's it. Oh, it's on an island. Got it. All right. Here's France. Interesting. Cool. I've been here, by the way. Been to Nantes, been to Paris. I've been around Paris. And I've been here. I saw the Tour de France finish here. This is the birthplace of champagne. Interesting. Okay. This stock is like worth following, the gambling one, because the margins are really good. I think gambling is like very steady industry. Like, I don't smoke cigarettes, but I could tell you cigarette companies keep selling cigarettes. People keep smoking cigarettes. It's what they like to do. So I'm gonna start a little section of my notes here. And I'm gonna share an observation of these live streams. I have found some really good investments by doing exactly what we just did. And I'm going to go do some homework on GAMB, keep an eye on it, maybe buy some shares. And I'll try to remember who told me. I think it was Rotel and Cheese, right? So, all right, Rotel and Cheese, we'll see. I owe, you know, uh, some other attendees for some really good stocks that I currently own that have been good ones that I wouldn't have looked at if it didn't come up in a live stream. It's a good one. All right. So Jersey's a tax-free haven next to the UK. So is Jersey like a part of the UK, a part of France? What I wouldn't want is like, you have near the US, you have some islands, but the problem is if the company officers do something like really bad, you can't hold them accountable. It's like that country's like, yeah, whatever. It's a stock. We don't care. You got to do something bad for us to enforce anything like, hurt somebody or, physically steal something from them. But if we're talking about stocks, we don't care. So it's not enforceable. So that's a huge risk because management can literally defraud investors and they would not be held accountable. What are the laws in Jersey? Right? Are they, I don't think they're governed by England or France or they'd be taxed. So I want to be careful with that as well. That's going to be part of my homework. All right. Okay, so do me trash. So Jersey gets special tax treatment. A lot of corporations are there. Interesting. So I'm in the US, so I don't know Europe that well. Maybe you guys, obviously you guys know it better than I do. So thanks for the crash course on tax havens over in Europe. I never even knew Jersey existed. Is this where you know how in the United States we have the state of New Jersey? Is that where they got Jersey? Is this where like that name came from? Probably, right? All right. This has been interesting, guys. It's part of the UK. Got it. So it's like Vegas, right? Where gambling's legal in Vegas or Nevada. Okay. Yeah, I like what I see in GAMB, Rotel and Cheese. Cool. All right, let's keep rolling. I got a list of my stocks. You guys tell me what you want to see. If there's any paid members out there, if you want me to look at a ticker, let me know. If you're not a paid member, you want me to fully analyze a ticker, $5 super chat, and I'll analyze one. So let me know. It looks like CRWV is going parabolic. Let's check out the parabolic situation. Core Weave up 7%. They IPO'd recently. This one here is a super risky stock. I'll leave it at that. I know this industry really well, and I could be. So it's up 189% from its IPO. It IPO'd and it kind of thumped down, right? It kind of went up and then it came down. It just IPO'd. So the same rules apply, which is you look at most IPOs, they fade. And this one here, I'm really concerned about. There's a lot of concerns there. So CRWV, I'm going to make a note of it and consider making a video later. All right, so that's Core Weave. It is doing really well because it announced, it IPO'd March 28th, and then it has gone up really nicely. with the whole AI data center hype. All right. So the so we looked at advanced auto parts. That one's done. We looked at bonds, talked about bonds. We looked at Bitcoin. Let's take a look at the markets, see what's going on. So things are not as green as they were last time we looked. Google's still doing well, but not up 4.7. It's down to 3. Meta's just barely in the green. Amazon's trying to go green, but trying to stay green. Microsoft's doing well. Palantir's still nice and green. And software's still okay for the day. I imagine, having looked at that the NASDAQ's up in the green. The S&P is down 0.21%. Then the Dow is down 0.31%. Interesting. Okay. So we're having a flat day. We're not catching any type of rally off of the news that, hey, the House did get a bill out of the Congress and on to the Senate. That news did not cause a rally. So it's going to be kind of a slow week. It's been a negative week. In year to date, the S&P was green for a little while, for a couple of days, and now it's back to red. It's down almost 1%. All right. So a couple notable names that I wanted to keep an eye on. So yesterday, Oscar was sold off big time. And it was part of the health insurance payers. There's going to be like, and these are normal, right? There's normal reviews to make sure that they're being reimbursed properly. And for some reason, the journalists are really attacking United Healthcare and the whole industry. And it's kind of normal, right? Healthcare companies tend to be the bad guy, and journalists really go after them. So bad news follows bad news. Oscar Health had a booming day for their earnings, and now they've given up a lot of those gains. Year to date, it's only up 6%. And for the 1 year, it's down 35%. All right, this is a buying opportunity for me. I've done videos on Oscar. If you want more details on it, take a look at my channel. It's a really good opportunity for me. So that one, I'm going to say I'm going to buy some shares. The other company that got continually being sold off is Reddit. And, similar to the story around Google, Google's losing their search business. They don't know what they're doing. All kinds of these negative stories. And then they show up and go, well, this is what we have. And it showed that they are ahead. They're not behind anybody. They're way ahead. And the market's like, whoa, Google's awesome. Yeah, they were awesome 5 years ago. They were awesome a year ago. And everybody that was a naysayer wasn't looking at the facts. Reddit is a business that I believe is different. It has terrific moats. And the thing I like about Reddit is the Reddit user is really interested in going deep into topics, right? When you look at the UI for Reddit, let's talk about, I'm going to pick a thread that I think is interesting. I usually just look at stocks and stuff, but a lot of people ask me about bonds. So let's go to bonds. This Reddit subreddit is excellent on bonds. When you read the comments and the drill down on the users, you can tell the people that are posting comments really know what they're talking about. I've been buying bonds for 30 years. I learned stuff from this subreddit. And where I'm going is you have 44,000 members of this subreddit. The loyalty, the stickiness is massive when it comes to this subreddit. And what's nice about this is it has a different UI than X, because X also has, some users that have a lot of followers. Here, it's not one user, it's a topic, it's a subject. And this is what makes Reddit different. You don't find this on Facebook. You kind of see that in Facebook a little bit, but Facebook is more topical. It's more like, hey, let me show you pictures of my last vacation or a wedding or a birthday party. Instagram is all eye candy, and TikTok is fun, short form videos, lots of fun. But Reddit is like hardcore. And this community, as an example, these guys aren't going anywhere. And Reddit, whether we like to know it or not, is grabbing all this data. And financial institutions are probably like, hey, I want to buy this data of all your subreddits that have orientation around bonds and stocks and investing. We want to advertise on these subreddits. We are, Charles Schwab, we're so-and-so, and they will advertise and pay more money to advertise on these subreddits. This is the difference in, like Upwork. This is a advertisement. They are advertising because they think they can pick up both employers and people that use Upwork. Upwork is where you can find a gig. And just the subreddits here are really, really good. I follow this subreddit and find it's really valuable. So back to valuing Reddit in the marketplace. So when we look at when I look at a company, right? So I'm trying to find, in a perfect world, I would want to buy a company like Amazon that has really good competitive advantages at a really good discount. Okay, so we got the Reddit little logo here. You guys can't see it because I'm in your way. No worries. Moving it over here. All right, you can see it now. And the top dog in their universe is not Amazon. It's Meta. And then the bottom dog is going to be like, let me think about the worst player there. But for a second, let me get the Meta logo and then figure out who I think is going to be a very old media company that is losing market share, just having a hard time. So we're going to put Meta up here because Meta is super powerful, competitive advantages, makes a lot of money, cash flow, everything. Down here is like old school newspapers. So I'm going to say things like the Los Angeles Times. Newspaper business, right? I can't think of a newspaper business, so I'm going to go with, let's just pretend this was a publicly held company for the example. So the LA Times, I'm in Southern California. 60 years ago, the LA Times was very important, very valuable. Now, they don't have any competitive advantage. Everybody wants their information online. Do people put ads in the LA Times? No, you go to Craigslist. You sell stuff on Amazon. You sell stuff on eBay. You sell stuff everywhere online. You don't go to the LA Times anymore. And they're losing money like it's They're just burning it, making piles of dollar bills and burning them. So LA Times is an example of a company in the red that are just going to continue to just get pulverized. Now, let's scorecard our friends at Reddit. Okay, competition. Again, I made the comments that I think that they're strong because they really have content that the people that are interested in that topic are going to really be attracted to and stay on. Network power. I'm going to give him, I'm not giving him A's. Why? Because this is the A student here. And I'm not going to grade with the curve, but I just can't give them an A. Balance sheet's excellent. They have lots more cash than they do debt. They're growing at 62% revenue rate. So that's an A. Profitability. Profitability was, I'm going to give them a B, and then they drive really good free cash flow. So if you're a high school student, you get 3 A's and 3 B's. You're like, hey, man, good job. That's a 3.5 GPA. It's a very good GPA. So these guys are right here. Okay. Reddit has competitive advantages, which is their way of providing social is for the intellectually minded user that wants to go pick out a few topics and probably, I don't know, visit Reddit once a day, once a week, and really hone in on, a subject that they want to get information on, and they check in on it. That's a really good place to be because the data that they sell is going to be more valuable than TikTok saying, oh, we got 1 billion users. And for all these videos that are funny, well, that's great. But, if you're advertising to, like I showed you that bond subreddit, if you're a finance company or somebody that is in that industry, you'll pay 10, 25 times more to advertise on that subreddit than on TikTok. You'll just pay more money because you are really targeting that market that is gonna get you more customers and make you money. Okay. So that's why I think Reddit is a really good opportunity. They've got great margins, great growth, setting themselves up well. They're discounted. The market's been selling them off. So I'm like, I will take lots of Reddit shares. Thank you very much. And build up a nice portfolio, build up a nice position in my portfolio of Reddit. I own a lot of Meta stock. That's my number one position. So I'd love to have another really strong social company. I don't have one. Right now I have Meta. That's it. So having Reddit is a good addition. I like Reddit. And today it's catching a little bit of a little rally going up, maybe because it sold off so bad. Sergio, good to see you. And then Jerry G. So let me make sure I'm catching all the comments here. So Rotel and Cheese, I've been loading my Reddit bags. Yeah. Company, if you like cybersecurity. Never heard of SailPoint. So they're a leader in identity governance. Cool. Interesting. So SailPoint. So they IPO'd, they sold off. So 9.6 billion valuation, revenue 861. No P ratio. Forward P is really high. See, the revenue growth is not exciting. They're really small and they're growing at 23%. Like CrowdStrike's growing much faster. I think CrowdStrike's overpriced, but this one is just not growing very fast. Might be that the market doesn't know their products well enough, but it is not great growth, right? They're small, tiny. They're burning cash, but they're getting better. They're burning less of it. Gross margin is 64%. That'll get better as they get bigger. Okay. They're losing money because they're probably engineering their product. They're probably putting a lot of money into it. This one is too risky. I think that cybersecurity is one of those spaces that it's most definitely a necessity. But the piece that I think people get carried away with that, which is, well, CrowdStrike's going to be great for 20 years. And I just want to remind everyone, the leader of the space 20 years ago is really not around anymore. I was McAfee, and they're like kind of gone. They've been in the rearview mirror for 15 years. It seems like every 5 years there's a new leader in cybersecurity, and it's because cybersecurity evolves quickly. It's like the biggest threats this year are not going to be the biggest threats in 5 years. It's going to be a different cocktail of threats because the bad guys are like, well, if they fortified, kind of the way we used to intrude environments, we're going to have to think of new ways that they don't cover. So they go to a different way. Well, that's a different company that's going to cover that. And the other threat that these companies will always have is the big, giant, dominant companies in software are Microsoft, Google, Amazon, AWS. And those companies are always looking for ways to grow. So you saw that Google acquired a cybersecurity company because they want bigger share of the wallet of the customer that they have on Google Cloud. They don't want them to go to Sale or CrowdStrike or Palo Alto. They want them to spend the money on Google products. Same thing with AWS and Microsoft Azure. Those companies will continue to develop their own cybersecurity solutions and or acquire others and then fortify their cybersecurity to the point where a customer feels more assured if it's a Microsoft product behind their cybersecurity or a Google product or an Amazon product, because those brands are way more valuable. There's more equity in those brands than a CrowdStrike, a Sale, a Zscaler, a Palo Alto. Those are tiny companies compared to the big, massive software companies. So just keep that in mind. That's what I think about when I look at cybersecurity. I think the space is easy for people to get their heads around. Oh, cybersecurity, we always need it. Yeah, you're right. But don't be surprised that if in 3 years, cybersecurity changed and now it's all about something else. I can't tell you what it is. It's just going to be something else. And we'll see how it evolves. So thanks for bringing up Sale, but that one is just, it needs more time in the oven. We need a couple more earnings reports before I would be interested. All right. So what's going on stock market? Are you going to let me close out some browsers here. Clean up my space. Oh, while I'm at it, I see some people that I've known through live streams for a long time. I'm not going to call anybody out, but join my channel. That way I could talk to you on member calls. Love to talk to you. I've never heard your voice. Take a look. Get signed up. $10 a month, $25 a month, even $100 a month plan. Different perk level for each membership level. And I'd really appreciate it. So take a look. It'd be great to see you become a member. All right. So I'm going to close out a couple more tabs here. Clean up my act. Found something out about Jersey. I'll keep Gemini open. All right. So market's still, it's doing better. NASDAQ is up 0.5. S&P is almost back to even, and the Dow is almost back to even. All right. That's better. All right. So seeing a little more green. That looks good. So I don't know about you guys, but I rarely trade in the first hour after the market opens. It's just the market can be really volatile. I want to know how news is impacting the markets. Unless I'm presented with like a wild opportunity, like, whoa, hey, this stock that I love is down 5-10%, then I'd buy it near the open. But most of the times I let the market kind of tell me the mood of the market, and then I make my decisions on what stocks I would pick up. And I'm a dollar cost average guy, so I use that technique. So that looks good. I'm going to move on to new holdings. That went down substantially yesterday. New Holdings is a financial services company down in Latin America, doing business in Latin American countries, doing really well, growing. And today they're up a little bit, but last 5 days it's been going down. I own enough new holdings. I don't own a lot. I don't want to own a lot right now because I think it is a little riskier. It's outside my home country, and I'm not going to own a ton of shares. Right now, I'm good with the shares that I own. And I am sitting on a gain, so I'm good. But I did see that it was selling off quite a bit. So, new holdings. Is there any news that... Yeah, nothing around, their business, like any good or bad news there. So United Healthcare, of course, that stock's been one of the most hated companies around. It's down 42%. This is a really, really good company. And their dividend rate's really gone up because of the stock depreciation, the contraction in the stock price. It's made the dividend rate kind of attractive. Historically, they paid like 1%, and now it's up to 2.81, which is attractive. They produce a lot of cash flow. Over a short period of time, this thing was down 54% over less than a month. No, a little over a month and a week. So this just became an opportunity, and I started buying shares. I'm glad I did. Over the 5-year, this thing's done well. Especially coming out of like the low point, which I think was Friday. Yeah, it was Friday. It just really went up. I think it's going to continue to go up. There's too much value here. The company grows well, really good free cash flow. And I think we're going to be sitting here 5 years later, and the stock's going to be at $700 a share. So I'm going to buy shares. Tony, what's up, buddy? Barty Artel Limited. Let's take a look. So Barty Artel Limited. I want to pick the right one. So this is in India. This is an India company. Yeah. Okay. So they're a telecommunications company in India and internationally. Mobile services in India and in Southeast Asia. Okay. Tower infrastructure, home services, digital TV. So they're a little bit like a T-Mobile in India. Market cap, and this is in their currency, INR. What is the INR to USD rate? So 0.012, so 1.2%. Okay. So 1.2% of this guy is going to be about 130, 140 million, I think, $1 million of market cap. This one's going to be a little bit difficult because there's so much translation. Let's see if this is going to help me. No, it's going to be still be in the foreign currency. Well, let's look at some growth trends, and then if it's worth it, we can look at it further. Over the 1 year, it's up 36%. Over the 5 year, 208%. Okay, really good growth, appreciation of the stock. The growth rate is good, 15%. Okay. And it's telecommunications, so I'm not expecting high margins. 64% is pretty good for a telecommunications company. Profit margins are good. Free cash flow margins are good. So this looks like a good company. Let's take a look at the balance sheet, make sure that they don't have, like, one of the reasons I don't like AT&T or Verizon is their debt level is like really high. And I don't like that. I think it makes them risky, especially as you see interest go up, interest rates. They're going to have to pay more interest. So it's going to be bad. So debt to EBITDA looks good. Everything looked good with this one. This one here is just, I'm going to note this one and kind of look at it after the stream, because it's hard to do all the currency translations and do a valuation. It'd probably take me an hour. And but I'll take a look at it when I have some free time. This is a good one. This is a very good one for a young investor that wants to really grow wealth. Take $5,000 and turn it into 50 grand. This is the kind of stock that'll get you there because their growth rate's good, fundamentals are good. It's in a country that I think the addressable market for communications is really big. There's organic growth where maybe there's some people that don't have a smartphone right now and they're going to have one for the first time, or they get internet for the first time, or they get, TV service for the first time. That type of organic growth will enable this company to grow for a long time, potentially. So a lot of homework to be made. It is outside the US, so it's a little riskier. But India, I know that for the last couple of years, I've heard that the returns have been really good. So it'd be good to take a look at it. So I'll look at it when I have some time. Thanks for bringing it up. All right, cool. So we'll do one more fly over the market. It's going green. That's good to see. Very good. All right. So that looks really good. Looks like the big stocks are working today. Palantir's on a tear. Man, Palantir is unstoppable. CrowdStrike's doing well. Palo Alto's doing well. Some of the software companies are doing okay. Healthcare is not doing well today. A lot of red. Energy in the red. Utilities in the red. So Tony, you like the idea of investing in India? Yeah, I think it's a good idea because India has a huge population, I think more than 1 billion people, and they want like a lot of the technology that first world countries have, and I think there's going to be growth for a long time. So do your homework, make wise choices, and then measure your progress on them. I think it's a good idea. So let's see. So we went over United Healthcare. One more stock that I want to look at is Zoom. Zoom is a forgotten software company. They're doing really well. They're buying back a lot of their shares, and they're trying to do what Apple did to really prop up their stock, and it's not working. They've bought back a lot of shares because they have a lot of cash, and they make a lot of money. They're growing at 3%, and the market's really pricing them down. Forward P is really low at 14.57. Over the 1 year, 27% gain, but the 5 year, they were a COVID era darling, right? They really went up in value. And since then, they've come down and stayed down for the most part. The 1 year looks okay. You can make some money here. But it is interesting that the market just does not give Zoom any breaks. They have a pretty good revenue stream, 4.7 billion, and they make lots of money. Really good free cash flow. So free cash flow 1.7, see that growth in cash flow, real good. They just keep making it year after year. Really high margins, good profit margin, good free cash flow margin. So I own shares of Zoom. I'm going to hang on to them. I have a feeling these guys are going to be acquired. It seems like in this space, individual companies get acquired. Cisco acquired WebEx way back when, and I think these guys will probably get acquired. So hopefully that happens, and then they pay me this big premium. We'll see. Philippe, thanks for joining. So Ion Q is on fire today. So Ion Q. %27, yeah. Quantum computing, yeah. These guys are in College Park, Maryland. And just any comments out there, when do you think quantum computing is going to be mainstream, used, regularly? Because I mean, I'm hearing that quantum computing is going to be like the next paradigm of computing, that it's just going to far exceed our computing capabilities. But I also hear that, it's 20, 30, 40 years away. And it's like, whoa, well, I can't invest in something that might be worth something in 20 years. It's just too long of a timeline. So these guys do quantum systems. And you can light up this particular infrastructure on AWS, Google Cloud, Microsoft Azure. Okay, so that's their website. Now let's take a look at their fundamentals. So $10 billion company. They are losing a lot of money. They are growing nicely, but that's not a lot of revenue. How many times revenue? So you have 43 million. So you're paying, what are you paying for this? You're paying like 200 times sales for the company. More than that, like 220 times. sales. That's really, really expensive. So this is a very low sales number, 43 million. They did grow it, but they're growing from like nothing to 43 million, which isn't a lot. Okay. It's like Dell does deals for 43 million. One deal, like one transaction. These guys are tiny. Gross profit isn't very good, 21%. I mean, 21 million, excuse me. The gross profit percentage is going to be higher. Gross margin 50%. Profit margin negative 753. Oh man. Not only do they burn cash, they're really good at burning cash. Wow, risky. How much cash do they have on their balance sheet? How much money do they have? And how many years before it runs out? So they have $570 million of cash. Okay. So assuming that their growth continues and they grow some, they get a little better on the profitability side, but they're burning $135 million of cash. Looks like they're burning more each year. So they have roughly 4.5 years. It's not, that's okay. It's like not concerning. They had like a year and a half. It'd be like, okay, now it's concerning. What are they going to do? How are they going to recapitalize to have more cash to carry on with this big bet? Right now, it's a big bet. These are really risky. If you know quantum computing and you believe these guys are going to make it and they're going to be the next big thing, go for it. It's your decision. But if you're like me, I don't know enough about it to know that, hey, these guys have the real stuff and they're going to be the ones that make it to the top. I have to stay out. It's just too risky. The fundamentals are extremely risky. This thing is a big bet. And if it comes through, it may reward shareholders. It may just be a really small return. It's just super risky. So if you know quantum computing, good luck. If you don't know quantum computing, and if you're like me, I stay out of stuff I don't understand. I have to be able to understand it enough from a business perspective, and the fundamentals have to be there. Here, the fundamentals are telling me, alert, 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 do not buy, because this thing could vaporize in 3 years. It could like be insolvent in 4 years. That is reality here. If they make it, they might make you some money, but you may lose a good part of your capital that you invested in them. It may go from $43 a share to 50 cents. And that would be brutal, right? So good luck to all the quantum computer investors. All right. So, all right, guys, I think I'm going to shut it down. It's been a good stream. Good to see some old names tune in. Very nice to see you all. Looks like the market's going to be mixed. It's going to be some winners, some losers. Some industries are doing well, while others are falling behind. You're welcome, Rotel and Cheese. Good to collaborate with you today, man. You really brought some good ideas today. Thank you. Right, everybody. So, again, would love to see all of you get signed up, become members. Come to the Discord, hang out, come to the member calls. Let's talk about it. Enough of this chat stuff. It's great, but man, when we have investor calls and we get deep into stocks, I think you would realize that it's pretty cool to be a member. So consider it, check it out. It'd be great to have you. And that's it, folks. That's it for Thursday morning. I'm going to stream again tonight around 9 p.m. Eastern, 6 p.m. Pacific. It's going to be the simplified stock investing stream. I'm going to try to do it mostly on my phone, and hopefully I see some of you there. I know it's going to be late for some of you in Europe, But if you're in the US and nothing really good's on TV, tune into my live stream, 9 p.m. Eastern, 6 p.m. Pacific. All right, everybody. Have a good day. Good luck. Hopefully you make some good money. Hopefully you own a lot of Google stock and you're enjoying the big game. Take care.